Hi everyone, hope you're all doing well, and today we're going to talk about Boohoo stock. You guys have wanted me to talk about Boohoo stock for the last kind of couple of times we've done the poll. It's not won, but it's always been a strong contender, and I thought, you know what, we haven't talked about Boohoo. We haven't talked about a lot of UK stocks recently because obviously there's so much going on with the US growth stocks, but we haven't talked about a lot of UK stocks recently, and especially Boohoo. It must have been a few months since we last talked about Boohoo, but we are very close to 10,000 subscribers. We're only about 50 short, so if you are watching this and you haven't clicked that red button yet, make sure you do. And you guys that are here all the time, you can smash the like button as well. Obviously you guys wanted to do this video, and here we are. So I'll try doing another poll sometime soon as well, so you guys can put forward what videos you want to see, and whichever one's the most popular, I'll do it for you guys. But yeah, we're going on to Boohoo. So Boohoo is a company that I started buying somewhere around July time, somewhere around here. My average is around about £2.40ish, and yeah, like I said, I haven't covered it on the channel for a couple of months, I would say, recently. It's just kind of been plodding on really in the background, as you can see. It's a very sensitive stock. It can move down, up and down a little bit. Also off earnings, it has had a bit of a history over the last kind of a couple of earnings or trading updates that it does have a little bit of a slump down, and it's currently doing that right now. Recently, the last kind of few days, it has had a little bit of a drop off there, about 12%. But yeah, still currently up a decent amount on this position. If I can try find where my average is, it's somewhere around about 240ish. I can't find it. Can I find it on here? If I just use this, yeah, yes, there you go. About 30% up. I was up a little bit more only a couple of weeks ago. It is a company that when it does get round to £3.50, whenever it does hit that, I do tend to trim 10% just to get some profit back in, and it has, I think that's been twice so far this year, and it has already made me a bit of profit. But I think the big thing to say with Boohoo, and we'll get onto the trading update in a little bit, the big thing with Boohoo is that Greg's used to be my biggest position until Boohoo in July, and then my biggest position was Boohoo until about January time, February time, and now it's S4 Capital, but Boohoo is still my second biggest position. So this does have this stock does in the UK front, so it does mean a lot to my portfolio, I guess, really. But the thing is not to get too hung up on the share price movement. If we kind of go from my average, at the start of this year, if I can just go to the start of this year here, we were up a decent amount, 44%. 44% from investing into a company in July, that's halfway through the year. To get a 44% return in like 6 months is nothing to be like, oh, Boohoo's like not performing. I've kind of got that sense at the moment that people are a little bit fed up with Boohoo, that it's not really doing that much. But realistically, you've got to remember, stocks don't just shoot up. They're not going to go up, 100% every year. And to be in this company for kind of like 6 months, and to have a 44% return in 6 months is pretty good going. If you could get 44% every year, that would be something pretty impressive. And let's not forget, that's only half a year. I've not even had this company in my portfolio for a year now, and yeah, I think sometimes people, I don't think it's loads of people. I think it's maybe some people that have been caught up in like 2020 like CV recovery and think that's something that happens every year. A 44% return is something pretty impressive, and if you could do 44% every year, that would be a pretty good return, and you'd see your if you ever go into a compound calculator, you put your say how much money you've got invested into the stock market, plus what you can put in every month, and then you put a 44% return on it, you can find that on a Google search. You'll see some very impressive results. So yeah, I don't think to get too hung up on Boohoo on its return at the moment. I won't do that because it's been pretty impressive, and you can see here it is slowly uptrending in the right direction. There's some big movements though every so often, so it does kind of like shoot up, shoot down, but if you do follow like the trend line, it is slowly moving in the right direction. And if we were to have and let's not forget 44% in half a year, if let's just say in 2021 Boohoo kind of puts in another 44% return this year, we're talking about the company just being short of £5, and that would be a pretty good return, and it would be close to 100% return for me. So I think some people are a little bit caught up on Boohoo's like price movement recently, but for me, as long as it slowly does what it keeps doing, if it was to do another 44% return this year, I'd take that easy right now, because that, like I said, it's nearly 100% return, and to get them sort of returns, you are well outperforming the market if you can do them sort of returns every year. So from just a price point of view, it is a very sensitive stock. But yeah, everything that's kind of going on with the share price, I'm just kind of happy with at the moment. As long as it slowly goes up how it is doing, it is kind of on one of its little downtrends now. But if from this downtrend we then go touch, 360, I'll be happy with that. So I guess we'll go through the trading update with Boohoo. The one thing that I think this company put in really good numbers last year. The CV situation did help this company, and now that it's the kind of balancing out of where we're having the CV situation coming down and normality coming back, and at the moment it's kind of like in the middle, and that's the worst thing for Boohoo, because then you have people not shopping online as much because retail's back open, so you see the e-commerce CV boom dropping down, and because we're not fully back open, we're not seeing holidays being booked and people buying things for going away. Obviously, going out is coming back, but it's nothing like what it used to be. And Boohoo's in this ugly kind of point at the moment where it's kind of 50-50 for everything. It's not really getting the CV boom anymore, but at the same time it's not getting an opening up boom because people aren't going on holiday and people are going out, but the people are going out, you're stuck in a beer garden with a big coat on or a waterproof and a scarf and a hat, and it's just it's not great at the moment. So when we see some normality, people are saying obviously the rumor is that it could be June time, that would be, that's what Boohoo needs. It now needs normality to come back, and that's what will help its sales come back again. So, and that was shown actually in the guidance that we'll talk about in the trading update in a second. But just going forward, it is at a little bit of a balancing act at the moment. But what has happened with Boohoo, it's 2020 results were very, very good. And maybe, you could argue the share price should trade a little bit higher where it is right now. But for me, personally, the one thing that is, this is the big thing for me as Boohoo as investors. Last year, this sort of thing is not what we need as investors. And there's an argument here that you can say, look, we've always said, this isn't Boohoo. This is suppliers. This is nothing tied with Boohoo. But unfortunately, when the media are writing these articles, selling, if they actually put the whoever's factory it is, if they put the factory's name in the title of the newspaper, it's not going to sell. You have to put Boohoo or Boohoo factory paying £4 an hour. It sells. So this is the thing. It needs to, even though it shouldn't really affect Boohoo, having Boohoo in the name is what's going to sell, and it just needs to make sure it doesn't have these ties with this. And I think this is a big thing that's actually, I don't think it's the company's performance that's holding back the share price a little bit now. I think it's actually these things. And if we could have a 2021 where it doesn't get tied with any sort of these articles, don't get me wrong, Boohoo in that newspaper articles, even if it's nothing big, will sell, and that's why they do it. But these sort of things especially, we don't need these here. And Boohoo are trying to sort that sort of thing out. They are getting better at it, and it's what they are focusing on. So credit to the management team. But hopefully this is the year that we don't have anything like this, and we should see the share price move in the right direction. And I think, to be honest with you, that's the big thing holding the company back now. Performance wise, financially, very, very impressive. But this is the big thing for me. So this is what I'm looking at Boohoo this year. I think it even had a bit of a thing only a few months ago where it had the label situation. I don't know if any of you guys saw that. Basically, they were kind of selling a product which was the same product for £20 more in Dorothy Perkins, and it's a Boohoo site, I believe it was. So yeah, them sort of things are what I think, to get the big money to come back in, it just needs to avoid that in my opinion. So hopefully that's what I'm not actually looking at Boohoo this year as a financial point of view. It's just okay, let's manage the situation of, we cut down this bad press. You're going to get bad press because Boohoo sells in the newspaper titles. But these sort of situations is definitely not what we need, and I think that they should be able to do that, in my opinion. Now, actually, onto the earnings point of view, I've got the earnings here, the trading update. Like I say, a very impressive number. Revenue grew at 41%. Let's not forget this company normally grows around like 30 something percent. So better than expected revenue. Very good on the gross profit side of it, adjusted EBITDA side of it. Profit before tax, a nice little increase there. Earnings per share, once again, very good because of the profit side of it. The big thing about Boohoo's now is this valuation just keeps coming down, and we're trading at like a P of 43, which is pretty good to be picking up a company that grows at like 30% and the profit it has and the balance sheet it has. To be picking that up at like a P ratio of like 40ish now, it's very good news. The valuation is so cheap. There's so many other companies. Something like a Greggs, for example. Greggs, if it goes back to normality, Greggs trades at like a P ratio of 30, but you're buying a UK bakery chain that grows at like 10% revenue and profit rate. Now, don't get me wrong, I love Greggs, but you're getting that for like a 30p ratio, and then you got Boohoo that grows double what Greggs is doing, and it's only a slight little bit of the valuation. I mean, Boohoo for me should be trading at probably like a 60p ratio. So yeah, it's definitely quite a cheap growth company when you consider what it has. Obviously, once again, the balance sheet is getting stronger, and it's been a year of purchasing a lot of companies as well. And this is what I think I like about Boohoo. One thing I always get a bit nervous about is UK companies is they always limit themselves to like the UK, and then eventually, what do you do when you've got like all your stores around the UK or you're maxed out in the UK? You kind of peak, the growth slows down, and your share price performance slows down. With these guys here, they're still growing massively, like in so many different continents. UK here, we've got 39%, internationally 44%. International revenue is now 46% of total, up from 45%. That international growth is growing at a really good rate, especially the US growth. So yeah, that's just great to see it's still expanding. Once again, talking about the balance sheet, very, very strong, and that might help it in the future with more purchases as well. Here we can see them once again talking about Brian Levison, bringing him to try and make sure that we have no problems media-wise, and obviously just in general, like having a little bit more of a research into who your factories are you're using and everything like that. So that's the big thing, like I say, we wanted to see. Relaunch of Oasis and Warehouse brands, which they purchased. Debenhams, obviously they bought Debenhams, which will give them more expansion going forward, because obviously now they're expanding from just being a clothes brand. I think they're going into like home products. I think they're going into like makeup brands as well. So this is obviously a big expansion of what they offer now. I really like that. There's more income streams there. So we'll see how that performs. Dorothy Perkins, another one they also bought. So yeah, more products, more brands that they have in there, which is really good. Now the big thing, I think, why it didn't move off earnings, when earnings come out, I'd say the big thing about earnings is that people look, 50% of them earnings is like what is going to happen in the future. Stocks are future thinking and what's going to happen. And I think this might have been why we've not seen really too many like massive reactions off Boohoo earnings through history, but I think this is especially this time round. Revenue growth for the full year to February 2022 is expected to be around 25% at group level. So for me, I think that this guidance here was very sandbagged. Historically this company's grown a lot faster than that. Even last year, obviously that even outperformed it. But 25% for me is a massive drop off. I think they've played it very cautious here. I think they've gone through the point of view of like, obviously you don't ever want, a company doesn't want to look an idiot and miss guidance for the year. So there always is a level of sandbagging. But I think Boohoo have come from the point of view is like, we don't know how long it is until, like I said earlier, about this kind of CV drop off and like people going back on holiday, going back out again, when that side of it recovers, I think they're unsure how quick that's going to happen. And because of that, I think that's why if we stay at this midpoint for a bit, it could actually not be a great year for Boohoo. But the thing is if the other side of it, if they're going out, the holidays do recover, I think they're going to beat that for sure. And I think and they have played it safe, because I think they're going from the point of view that if it does stay level until, say, it doesn't happen in June time, if we kind of get, we don't get that, if we still kind of have this limited holidays and going out until, if CV cases spike in December and there's, social distancing comes back in and there's not as much going out, that could really hurt financials. And I think they've gone from that point of view as like, we don't want that to happen because obviously we're going to miss guidance. So I think they've definitely sandbagged this, and they've kind of gone from that point of view. But, let's just say like the vaccine rollout. I mean, what the vaccine rollout is now on like 38-year-olds, is it? If the vaccine rollout happens, social distancing goes in June, everything kind of, going out still, starts happening again, more and more holidays start happening again. For me, to February 2022, they'll smash that easy. We will be talking in the 30% range. And I think that's the point of view that they've gone from, is they want to play it safe and not risk it. And I don't blame them, because otherwise you do look a bit of an idiot. But I think they've left us a lot of room to beat here, and I do believe it will be in the 30% range. We'll see what exactly happens here. I think they did a actual conference call with this trading update, so you can go check that out on the investor relation page. And it was about an hour and a half long, and I think even in like that, they pretty much went on to say like, we are having a decent year so far, but we are start of seeing that leveling out, and it's not as good as last year, is what I think they were trying to say, but it still seems pretty strong. So yeah, I mean, that's just something to keep an eye on, but I think they did play it a little bit too safe there, and that's probably why we haven't seen much of reactions off earnings, even though they've been really strong this year. For sure, in my opinion, with the earnings that we've had through 2020, this stock should be trading at probably above £3.50 for sure. But yeah, overall, that's kind of my thoughts with Boohoo anyway at the moment. And like I say, if it does have another year what it has had this year, I'd still be very happy as a shareholder. And I'd be talking getting near, if we were to have another 44% return this year on the share price, I'd be talking nearly 100% return. And coming up to a year and a half of holding this position, if I had 100% return, I would have took that easy. So everything that's going on with Boohoo, I'm just happy with. I'm still holding it at the moment, and it's just nicely going along in the background at the moment. And hopefully, if you guys want to see a Boohoo update, that was the video that you wanted to see. And still no plans to sell. Happy to hold at the moment, and very happy with what's going on. But hope you enjoyed it. Smash the like button. If you're new, make sure you subscribe. Let's try to get to 10,000 subscribers before the end of this week. But I'll see you on the next one.